Hi, folks. This week we want to talk a little bit about the war in Iran, but more importantly, how the markets are reacting and what this means for you and your investment portfolios. Anytime there is any saber rattling or any conflict with Iran, the big question that always comes up is what's this going to do for oil prices? And as we've seen over the last couple of days, oil prices have increased sharply. The reason for this is Iran typically threatens or attempts to shut down one of the largest transit pathways for oil and liquefied natural gas in the world. That is the Strait of Hormuz, which is right off their territorial waters. And long story short, this is not just about oil prices, but also about what that increase in oil prices could mean for inflation. Inflation is still somewhat sticky, not necessarily in the US, but certainly around the world. And the big concern that this conflict has created is related to how countries are going to handle a potential significant increase in inflation due to an increase in oil prices. And what we're seeing in the markets today is US markets have been volatile. They are declining today. But the big losers over the last couple of days have not been the US or domestic markets. They've really been international markets. And the reason for that is international markets, think Europe, think Asia, are net energy importers, i.e., they are more cost sensitive to increases in oil prices than the US, who is a net energy exporter. And again, this is exactly what we're seeing. International stocks have declined more over the last couple of days than US stocks.